Ethereum hitting $700,000 per coin. It's the kind of headline that grabs your attention, stirs excitement, and for many, sounds absolutely insane. But this isn't just hype echoing through Twitter threads or speculative chat rooms. The bold prediction comes from Vivek Raman, a former Wall Street analyst whose financial insights are shaped by more than a decade at top-tier banks like Morgan Stanley, Deutsche Bank, and UBS. When someone with that kind of pedigree makes such a forecast, it's worth asking, what's behind the confidence? Is there a real roadmap to such a staggering price level? Or is it just another moonshot in the world of crypto speculation? Let's break down the layers of this prediction, starting with the context of previous forecasts. Ethereum, since its inception, has been the subject of ambitious price targets from some of the biggest names in finance and crypto. Cathie Wood, CEO of ARK Invest, once predicted that Ethereum could reach $180,000 per coin, based on its potential to become the settlement layer for the world's financial system. Tom Lee, another respected voice in the investment community, placed his target even higher, at $444,000 per ETH. These numbers, while lofty, were grounded in the idea that blockchain technology would fundamentally reshape how value is transferred and stored globally. But Vivek Raman's projection goes even further, $700,000 per coin. At first glance, this sounds impossible, almost fantastical, yet Raman's prediction isn't based on mere speculation or wishful thinking. It's rooted in a detailed analysis of how institutional money moves, how financial systems evolve, and the specific mechanisms that could propel Ethereum to unprecedented heights. So, who is Vivek Raman? And why should his opinion carry weight? Raman spent over a decade navigating the intricate machinery of Wall Street. At Morgan Stanley, UBS, and Deutsche Bank, he witnessed firsthand how trillions of dollars flow through the world's financial arteries. This experience gave him a unique vantage point. He understands not just the mechanics of investment, but the psychology and strategies of the institutions that drive global markets. Raman is also the founder of Etherealize, an organization backed by the Ethereum Foundation and even Vitalik Buterin, Ethereum's co-founder. Etherealize's mission is clear: bridge the old world of traditional finance with the new paradigm of Ethereum and Web3, creating pathways for institutional investors to enter the ecosystem with confidence. This background is crucial. Raman isn't just theorizing from the sidelines. He's actively building the infrastructure needed for the next wave of adoption. And it's this intersection, where traditional finance meets crypto, that forms the foundation of his Ethereum thesis. Before we get ahead of ourselves with the $700,000 figure, let's take a step back and look at what Raman sees as the next realistic milestone: $80,000 per ETH. This medium-term target is grounded in Ethereum's evolving role as global financial infrastructure. The recent launch of Ethereum Exchange-Traded Funds, or ETFs, marks a seismic shift. These regulated investment vehicles open the floodgates for trillions of dollars held by pension funds, insurance companies, and corporate treasuries. The impact: Ethereum gains legitimacy as an asset class, and institutional demand ramps up dramatically, mirroring what we saw with Bitcoin ETFs, which catalyzed a new phase of investment and price discovery. But there's a critical difference between Ethereum and Bitcoin that Raman emphasizes. Ethereum, unlike Bitcoin, offers native yield through staking. This means that holding ETH isn't just a speculative bet on price appreciation. It's also a way to earn a steady return, much like owning a blue-chip stock that pays dividends. In the world of traditional finance, yield is king. It attracts long-term investors, makes an asset more attractive for corporate treasuries, and encourages holding rather than selling, creating a virtuous cycle of demand and scarcity. At the heart of Raman's thesis are four powerful forces driving ETH higher. The first is the rise of Ethereum ETFs, a clean, regulated bridge for institutional capital to flow into the ecosystem. For years, institutions were hesitant to touch crypto directly, wary of custody risks and regulatory uncertainty. ETFs solve these problems, allowing trillions in managed assets to allocate to Ethereum with the same ease as buying stocks or bonds. The approval and launch of these funds mark a turning point, signaling that Ethereum is no longer just a speculative play. It's becoming a core holding for the world's biggest investors. The second force is the supply shock. Over 30% of Ethereum's total supply is currently staked, locked away in the network to secure its operations and earn rewards. This staked ETH is effectively removed from circulation, reducing the available supply on exchanges to record lows. When demand rises, and especially when institutional money comes pouring in, this scarcity amplifies price movements. It's basic economics. When supply contracts and demand surges, prices climb, sometimes explosively. The third force involves Ethereum treasury companies. These are billion-dollar firms and investment funds that are accumulating ETH for the long term, rather than trading in and out based on short-term price fluctuations. Their strategy is clear: accumulate on dips, hold through volatility, and treat Ethereum as a strategic reserve asset. This behavior has a stabilizing effect on the market, absorbing selling pressure during corrections and providing a floor for price action. The fourth and perhaps most transformative force is real-world adoption. Ethereum isn't just a speculative asset. It's the backbone for an entire ecosystem of decentralized finance, stablecoins, and tokenized real-world assets. Major players like PayPal are issuing stablecoins on Ethereum. Governments and financial institutions are experimenting with tokenized bonds and even tokenized U.S. treasuries. Every transaction on Ethereum burns a small amount of ETH, permanently reducing the supply. As adoption grows, this deflationary mechanism becomes more significant, acting as a counterweight to new issuance and further tightening supply. So, with these forces in play, why does Raman believe $700,000 per ETH is possible? It comes down to the idea of Ethereum becoming the settlement layer for the global economy, a technological backbone as essential and ubiquitous as the internet itself. Today, the total value of global assets, stocks, bonds, real estate, commodities, is measured in hundreds of trillions of dollars. If even a fraction of that value, say 10%, migrates on-chain and is settled through Ethereum, the network could capture 60 to 80 trillion in economic activity. Given the current and projected circulating supply, falling below 90 million coins as staking and burning continue, the math begins to make sense. A price of $700,000 per ETH reflects Ethereum's potential to underpin the digitization of value itself, becoming the infrastructure for everything from instant payments to global trade, asset management, and beyond. Of course, such a dramatic transformation doesn't happen without risks, and Raman is clear-eyed about the challenges ahead. The first is scalability. Ethereum must continue to evolve, improving throughput and reducing costs to meet the demands of mass adoption. Solutions like sharding, Layer 2 networks, and ongoing protocol upgrades are already in motion, but the technology must keep pace with growing usage. Competition is another factor. While Ethereum enjoys first-mover advantage and the trust of developers and institutions, other blockchains are racing to capture market share with faster speeds, lower fees, and innovative features. Ethereum's open-source nature is both a strength and a vulnerability. It must remain the most attractive platform for builders and enterprises. Regulatory uncertainty is perhaps the most unpredictable risk. Governments and regulators around the world are still defining the rules for crypto, and sudden shifts could impact everything from ETF approvals to how assets are classified and taxed. The good news is that the global regulatory environment is moving toward greater clarity, with major economies recognizing the importance of digital assets and creating frameworks for institutional participation. Ethereum, with its track record of security and transparency, is well positioned to benefit from these developments. Amid these risks, one thing remains clear. Institutions are coming in, and Ethereum stands as the most trusted, widely adopted network in the space. Its resilience through market cycles, its role as the foundation for DeFi and stablecoins, and its ongoing evolution all point to a future where Ethereum is not just a speculative asset, but a core component of the digital economy. So, is $700,000 ETH just a moonshot fantasy? Or is it the logical outcome if Ethereum truly becomes the financial backbone of the digital age? The answer depends on how the next decade unfolds. The $80,000 milestone already looks within reach, driven by institutional adoption, supply constraints, and real-world utility. If Ethereum continues to scale, outcompete rivals, and embed itself in the fabric of global finance, the possibility of $700,000 per coin moves from the realm of fantasy to the edge of reality. The story of Ethereum is still being written, and its ultimate value will be shaped by innovation, adoption, and the collective actions of millions of individuals and institutions. If the internet was the platform for information, Ethereum aims to be the platform for value, a transformation that could redefine wealth, ownership, and opportunity for generations to come. Now it's your turn. What do you think? Could Ethereum actually hit $700,000 one day? Or is this just another wild prediction destined to fade away? Share your thoughts, your skepticism, or your excitement. The journey ahead promises to be one of the most fascinating chapters in financial history. If you found this breakdown valuable, don't forget to hit that like button, subscribe, and turn on notifications. There's plenty more to discover about Ethereum, crypto, and the future of finance. Stay tuned for deep dives, expert interviews, and the latest insights from the world of Web3. As Ethereum continues to make headlines, remember that the path to $700,000 is paved with innovation, collaboration, and a relentless drive to build a better financial system. Whether you're an investor, a builder, or simply curious, the possibilities ahead are as vast as your imagination. Ethereum's journey is far from over, and the next milestone may be closer than you think.